Welcome to Momentum Monday. Today is December 4th, 2022. Howard, how is the weather in Phoenix?
No, kind of rainy. The last 2 days I had to play just a downpour of 24 hours. So random. December is probably the only month that's somewhat weak in Phoenix, which means we probably had storms coming from Cali. Was it rainy there?
It wasn't really rainy. It was cold for a few days, but nothing to complain, really.
I had a long ride in the rain today. It was grueling. So I'm a little bit pooped. All right. So take the interesting week, right? We got above the 200 day
Yeah,
rally off the low. So walk us through.
definitely a lot of
I
major.
got a haircut. I said I wasn't going to get a haircut in a few
Oh,
months.
okay.
I said I wouldn't take a haircut until we got above the S&P.
Well, now you can get you can
We
get
did
one. So,
yesterday.
I mean, the market is still paying a lot of attention to what the Federal Reserve is doing and saying.
Mhm.
And it was a little bit worried ahead of Fed's Chairman Powell speaking on Wednesday. That's why we saw that little pullback to the rising 20-day on all the major indices, the
Mhm.
green line. But it turned out that Powell is actually acknowledging what the market has already been discounting, that there are enough reasons to slow down the pace of rate hikes from 75 basis points to 50 basis points. That's still pretty that's still a tightening, but the
Mhm.
market was happy with that, and we saw a major
Yeah, it's amazing we
high
go
volume.
get high volume up when he's only talking about raising 50 points, whereas 2 years ago, if he talked about raising 50 points, the market would have crashed.
Sentiment has changed. It might be temporary,
Mm.
but as you said, the S&P finally closed above its 200-day. Like, the other level I would pay attention is the 50-week moving average, which is around 413. It's not there yet. Um, but that's really important level from a long-term perspective.
Mhm.
And we're definitely seeing with the S&P above the 200 more setups, more breakouts
Mhm.
from various sectors. And it's not just the S&P above its 200-day. I mean, even China, which has been definitely leading on to the downside for a very
Mhm.
long time.
Yeah, back to 30, man. That is a huge. I was looking at like Luckin Coffee, which was like a fraud-riddled coffee.
Coffee
Yeah,
chain, yeah.
Starbucks knockoff. That thing's like up 500%. But everything's up 50 to 100% from it. Not
Yeah.
everything, but a lot of stocks. I think PDD has probably been the strongest.
Yeah, the strongest earnings, definitely.
Yeah, but I mean, again, like I don't know, like one's fooled. It's like Mexico, like what you're investing in like the whim of Z. Uh,
I
but
mean,
yeah, that's how
the
bottoms are formed. Like no one believes, and no one wants to touch it, including me. It's like cannabis. Like no one wants to really touch it. And the new thing that no one will want to touch is cryptos. So now that crypto's out of favor, maybe China relatively looks.
safer, yeah. China looks safer than
I mean,
crypto,
in a
yeah.
world riddled with fraud, China seems to be, at least got a big market.
Yeah, so
At
definitely
least it's a proven market.
big moves, and actually some of them are kind of setting up. Like, look at all the Chinese EV,
God
the
bless.
electric vehicles are kind of setting up for a potential, swing.
I
Look
mean,
at
it's
this.
funny because USC, like, listen, this is, I wanted to chat with you all week about it. It's like, you finally can earn, you couldn't earn for what, 10 years, like at 1% in your savings account. So, of course, you finally got everybody into the market. Finally, 2022. Now, savings rates in your savings account are 4%, and it's the lowest
No,
US we're at like 2% for like cash and people's savings accounts. It's like it was as high as 30% in 2020. So the Fed did its damage. You got everybody speculating, right? And I think sure, I'm just gonna pull it up after, but remind me to pull up the savings thing.
okay.
So US, of course, the market rallies, savings rates went to 30%, right?
Yeah, but
The
that was a
problem
unique
is,
period of time. Yeah.
I understand, but but now I think it's too late, right? Like I'm not saying you can't make money off this market. God bless. Like the market, at least we're back above the 200-day, and U.S. dollars getting creamed and bonds are getting a bid, so that's good. These are all signs. But look how fast people are rushing back into China, and even cannabis, like on the bank, maybe Safe Banking Act. So people are just looking for the next speculation still. God bless. Like I said, like that's a great trade. Some people finally caught the bottom there in China are onto something. It could be historic. I mean, Z could come out tomorrow and say, you know what, we're democratic, and then it would double again. But I just doubt that.
Yeah, it's not just China though. We're seeing an
No, it's
improvement.
real stuff. Industrials, financials, healthcare. What was that? Like, keep going.
Yeah, I mean, even biotech is back above its 200-day and kind of holding above it, which is the more important part. And we're seeing some interesting setups in the biotech field. Something to pay attention to. There are like at least 10 or 20 of them that are kind of setting up. Obviously,
Yeah, you've been talking about this a while.
they're super volatile, and they need to be played either with smaller position size if you buy the stock, or just use options if they're
Will you
liquid.
share these in your note today?
Yeah, I'll mention some of them.
Yeah.
And obviously, you mentioned the industrials on Friday. Another thing that popped out was all the defense, all the military stock broke out across the board.
Break out again? Yeah.
Which I don't know if the market is expecting further escalation in Ukraine, but
I just think it's just the democratic war machine, right? Like
many of them broke
out.
It wasn't
a red wave. It wasn't a red wave, and maybe it's just.
It's not just the military stocks, but also steel stocks, which are also kind of related. Steel and copper, and this is the curious part about the rallies that we're having, is that all the metal stocks are also rising, which basically they're going to lead to inflation down the road. So it's really a slippery slope.
But you got a divergence. Oil's down and energy stocks are
right. Oil is down for now.
No, but energy stocks have rallied all-time highs on this.
Yeah, they're near all-time highs.
Divergence there. But you have some good price leadership that you just went through. Healthcare, financial, a lot of financials breaking
Industrials,
out. Interactive Brokers, it's $30 billion company. Goldman looks ready to break out to all-time highs.
There are plenty of setups from various industries, and definitely an improvement. I mean, obviously, I would pay attention to how the S&P will act around this, like that 413, 414 level, which is the 50-week moving average. But now that we're seeing so many setups, we can pay more attention to individual stocks, not that much to the indices, at least until December 14th, when is the
correct. We'll talk about it next week, but like the stronger this rally is into December 14th, the more likely is for there to be a surprise the other way. But anyways, this is good traders market. You've last week you kind of got bullish. We were talking about all the setups. This week was a good follow through for the traders. Stuff like MasterCard bounced. None of the fintechs are bouncing, but MasterCard, Visa are setting up well. I gave up on MasterCard, right? Like
it's a mess. Look at this stock.
But I gave up on it, right? And then it just rallied. It just was like...
There's no trend, Howard. It's just sideways choppy action. Why would you own that?
I'm saying that's why I finally gave up. I was but again, like compared to fintech, it looks great.
Oh yeah, I mean, I think PayPal even broke down on Friday again, so it's definitely looking weak. I don't know about Square.
Like I said, here's what you got to worry. There's two things you got to worry about. Housing still looks terrible. Maybe the housing stocks look good, but they look okay.
Improving, yeah.
Yeah, but yet slow down and if housing starts. I'll go through Charlie's stuff in a few minutes, but you have all these tech companies now are going to walk away from big city leases, huge leases, right? All the FANGs and all the layoffs. So you're going to incredible, all these guys coming into save real estate, all these tech companies now are pulling out of leases, right? Work from home and the recession and just overemployment and overpayment in that space. Second thing is, again, I don't know if it's enough to bring down the market. Tech's just one sector. It's a huge part of the S&P, but it's just one sector. The second thing is that savings rate, right? Like you can get, so first of all, you can get 4%. So guys like me, like you got to convince me to get out of cash, right? When I can earn 4% without stress, right? Looking for great setups. And I think biotech's probably the greatest setup, but I don't know the sector. So it's very hard for me to have any conviction.
Yeah.
And then I
work
don't
with the
want to,
ETF, yeah.
yeah, I don't want to own defense stocks just because, again, like it's a bet on the industrial complex, which I hate. So it's tough for like people that have been growth, people like myself to kind of pivot into this new paradigm. But
there've been a few growth stocks.
Yeah, like this end phase we've been talking about forever. First Solar broke out.
Yeah, solar definitely one of the leading.
Axon, which is Taser, broke out or breaking out. This is not on volume. Again, this is just a few companies, but these are kind of growth companies, right? Like there are, it's a very unique company as we've talked about in the past here. Axon, First Solar. What's this? Fluor is industrial.
Just another leader. Yeah, there are plenty of stocks actually that are setting.
I'm talking a lot of like my bigger clients who are more diversified and they've had a good year. And then they tell me that it doesn't feel like they had a good year, but they didn't, some of the older people in ags and some of my clients in industrials and ag business, they've actually told me they've had great years. So yet the media, like in the background, they thought they've had a terrible year, but like if you've owned the right sectors, this has just been a flat to possibly up year. And, but I'm more of a momentum person. So if we look at ARK, like that is what it feels like to be on the other side of this, right? So if you didn't have cash management and take stop losses, you're down 60-70% this year. So it just feels like the end of the world. And then part of this, I mentioned this in my post today, but Asana, which is just symptomatic of like these tech CEOs, ASAN, I think. Ivan. This guy's out, the CEO, and he's not a dumb guy, but obviously knows nothing about the markets. He's complaining that like the stock is doing whatever Powell says, right? He was out saying, Powell's keeping a lid on his stock. But yet I don't think he was helping. I don't think he was talking about Powell when the stock went up at 600%. When Powell had his foot on the cash cannon. So again, like it's hard for me to get bullish on tech. You got young CEOs who've only seen a growth market. They've been non-governed. They've been able to do this RSU stuff, and so it's just going to take a while in that area. What is happening though is like you're saying, it's just the money's not coming out of the market, even with 4% cash. So
yeah, it's just rotating. There are definitely plenty of
IBM. Geez.
Yeah, and I think they still pay like 4.5% dividends.
There you go. You're getting 4.5% dividend.
Yeah.
But on the other side of that is Verizon and AT&T. They were paying huge dividends.
Yeah, that definitely.
Again, it's tough. Yeah. Disney's paying a big dividend, I think.
Disaster zone. I'm not sure. Let's see. Disney. Yields? No, it doesn't say. Sorry. They're not paying. So.
Okay, my bad. But Verizon, AT&T. So it's not just as simple as like buy dividend stocks.
Yeah, obviously you need to have some growth too. And it all depends on expectations. If the market was expecting a lot less, as you can see here, IBM, they beat earnings estimates, gapped up, and it's been a straight move up after that. And the same with Golden.
That just looks like China. So it's like, this is a great trader's market for people like you who look at hundreds of tickers. But I think going back to the S&P, it's great that we're back above the 200. Let's be honest. We've been just harping on this, so it would be remiss for us not to talk about this. Most important. That's great. Fantastic. it's time to like at least breathe and reposition if you haven't repositioned yet. Okay, you can be bearish or bullish, and like the media is going to affect that, but price action says it's crazy to be super bearish right here.
Yeah, the dips are getting bought. We even saw that on Friday when the payroll report came above estimates. The market, got scared for a little bit, so it gapped down 1% or so. It kind of sold off in the pre-market, and then it completely recovered. So
yeah. Time to be bearish was last year when all the headlines were great, SPACs, stupid deals. With the fraud coming out, with crypto taking in basically a washout, complete washout, and with cannabis being a complete wipeout again, other than political.
It's such a tiny market. I don't even know why.
No, I understand they're tiny markets, but a lot of the froth, and then China, a lot of the froth. It's hard to be bearish now. It's easy to be bearish now. Don't get me wrong. It's really easy to be bearish now. Now the hard thing is why to be bullish. And so I was looking for price action. We've got that, right? I'm also seeing in my industry, I wouldn't say deals, but I would say we're starting to see people at least willing to talk to me, like level-headed about what prices. I'm still losing out to like VCs that like I'm not even close on some deals. People that I spend a lot of time with that just shop and can get whatever deal they want. So there's still a lot of capital chasing because it has been raised and to be deployed right now. So the next 2 years is really going to be about being discerning, much like you're flipping through hundreds of stocks to kind of figure where all this is at. This is also a really important time, like that's why I talk to you once a week, to follow people that have been right a lot, right? Like we've been wrong a lot, but we're right a lot about the overall positioning of people. You've been very nimble the last 6, 7, 8 months, maybe 10 months. The other person, JC, my friend at All Star Charts, I'm not telling people to let him manage their money, but you should read people that have an ability to use price, because he's seen a lot of these things that you and I have been talking about, financials, biotech. He started to see the bottoms forming in June. I couldn't get out there with the price action and us being so far below the 200-day. But there's a lot of people that have gotten this bottoming process right. I guess the proof is now going to be over the next 2-3 months to see, the follow through. What are you looking for mostly right now? I mean, what are you looking for?
I'm just looking for just industry themes. As I said, when I see multiple stocks from the same industry breaking out, that's definitely something that I want to be invested. Like it was the case with solar and with China and with military stocks last week with biotech. And I continue to also trade the earnings gaps. Like this season, we definitely saw quite a few follow-throughs for the first time in a while. And even in stocks that are like super boring, like Cisco, it would break out on earnings and it would have a follow-through. So there were definitely a lot of opportunities just playing those post-earnings drifts higher for the most part.
But it looks like staples, energy, industrials, and financials and biotech are like, if you really are looking to be long, those are the areas, and even some drug stocks. But again, and beverage like Monster breaking out. So I said,
Celsius is the big one. I mean, it's very volatile, but
but I mean, Monster has been around for 100 years, so they're like in the end, I would go with the less speculative one personally. I go with 8 to 80 brands in this. So one an 8 to 80 brand. I've just never been a user of the product, so
it was the best performing stock in the first decade of
the poster child of why it's hard to pick stocks. This is sitting right in plain daylight, and every under 30-year-old uses the product
1,000 times basically since 2000.
They could buy Snapchat. What's the market cap on this thing? They should buy 54 billion.
Yeah, well, it's small.
I mean, it's not small for selling smoothies and energy drinks. 54 billion is fucking behemoth.
Snap is 17. So, yeah.
I mean, Snap just feels like the best of the narrow, Pinterest and Snap, but like still so overvalued in my opinion, just at the price. And then they got the artists. It's just hard to pick these tech stocks because you don't know how they're like paying, like just the amount of overhead and like what they pay employees. Just so
Okay.
tough.
Are you going to be sharing any charts or?
Yeah, I was going to. So you want me to share my screen?
It's up to you if you want to.
Yeah.
Okay. I'll
Yeah,
stop
yeah.
sharing and then you
Let's
could.
go because Charlie had a real. I was going to walk through Charlie's weekend charts.
All right. Go ahead.
All right. Do you see my screen?
Not yet.
What about now?
No.
Oh, I got to accept. Hang on. I want to make sure I don't have passwords up like I usually do. What do I do? Shit.
Your password for your FTX account, right?
I just cannot believe that whole.
Or the BitConnect. What was that company back in the time?
Hang on. Are you taking? How do I share my screen? What do I do again?
So.
Oh, share screen.
Share screen, yeah. Just click the dots. Okay, now we're seeing your desktop. So just pick the screen that you want to share.
How many tabs I have?
The page. Yeah. Okay.
All right, let's go. This is interesting because Charlie does a great job on the macro fundamentals. So let's go through this because I read this. You might as well see it as I'm reading it. I go to U for price, JC for price. I read a few VCs. I don't know what people make this so complex, but I can do all my market work between you, Charlie, and JC. Covers everything I need to know macro and swing and JC technical. So again on my Sunday, and then I go to StockTwits 50 lists or 25 lists. So anyways, climbing the wall worry. The sentiment was a record 36 consecutive weeks with bears greater than bulls. We shouldn't be surprised that there's a rally. Okay. The question is it a bear market rally? No one knows. So, position sizing and money management important here. But like we've been saying, there's a reason to like not be short. Unless you're kind of an FTX type character. Okay. What Charlie's saying is impending in the sugar pyramid. Yeah, we got a recession. Okay, I don't know if that matters anymore because it's coming, but like I don't know if that's priced in. Yield curve inversion. We know that's been going on a while. Again, recession. The question is that priced in? You and I talked about this earlier, the case for smaller hikes. For some reason, that's now good news, whereas a 50-point threats of a 50-point basis hike in 2020 would have taken the Dow to like 1. So timing is everything. So again, like the market is starting to price some of this in. This is Charlie's good point. Like, don't get too excited because when, there's a case for continued hikes because of wage inflation. And hourly wage are still inflation's crushing them. So like you can see that now in the savings rate, we're 2%. And we'll get to that. Here it is. This is the one that freaks me out because, again, this is not to make an investment decision because it's not like one-on-one causal, but there's very little room for mistakes here, right? People are, Christmas coming up, people don't have money. They don't have savings. And at the same time, we could be tipping into a recession. And if tech people don't have savings, which I think they do, they just have to adjust their lifestyle.
Isn't this good news for the bank? That means people need to borrow more?
Yeah, it depends. But if everybody's lending like we saw with Affirm and all these buy now, pay laters, well, all the loans are bad. So, the scam can keep going, Ivan. Yeah, and that's not the question on this. I'm just saying that is disturbing to see U.S. personal savings rate. People were doing normal things in this panic. People rushed to save money. The Fed originally said, fuck, based on this data, we got, and the fact that there's e-commerce and everything, we got to flood the money. But right now, people have not been paying their student debt for, 2 years, Ivan?
Why would they? It's probably going to be canceled.
Okay, but what I'm saying is, think about the inflation that caused and the fact that maybe it has to be canceled. Not that that's good or bad. I don't want to get into the politics of it. But if it isn't canceled, we've got all these loans that haven't been paid back. They've been put on hold, and savings rates at 2%. So that to me is like.
So do you think that's a side effect of just people expecting higher inflation?
I think that's a side effect of this like drunk public thinking that they're going to be saved, right, by Trump or Biden or whoever the president, kicking the can down the road. And then one normal thing they did, was start saving money because they were, even in the face of 0% interest rates. And now we force them into the risk pool and they're speculating. Look, we've gone from crypto to China. We've gone, how quickly we start speculating again. We're biotech, right? Like these companies may be breaking up, but these are not cheap. These are not cheap stocks ever in biotech. So there's still like rampant speculation. All right. Well, from money supply, I don't want to Tesla flipping. There's Tesla flipping going on, right? People, and the same thing with Carvana. We were all using Carvana to just make fun, to just pay us for our shitty cars. What else? Interesting divergence in energy. We talked about it a little early. And then, I prefer, as I tell people that call me, when I'm selling puts or selling some premium, I like to sell premium when the VIX is over 30. Well, the VIX finally peaked under 20. So this is a good, listen, VIX can drop down in the mid-teens, and this is when people start getting a little more comfortable to buy stocks. So this is no signal to like get out of the market, but it was a much better time to speculate with VIX over 30 with a little bit of money. So those are things that I look at. What is it? And this goes to show the home builders are not showing this either, but the housing slowdown continues. This is where people have most of their savings tied up in their home, which is really stupid because it's a non-productive asset, right? Which it's been great for the country, like mentally, I guess, or like for home. Everybody just takes so much pride and like needs to own their own home. But, prices, we're also our moods tied to the price of that house. So it's like a slippery slope. So anyways, those are the things. I think that's like a good overview. I'll switch it back to you now. That's a good overview of how I wanted to walk people through how I'm thinking about this. So, for me right now, I'm like you, I'm licking my chops about, okay, there's finally in the private markets some conversations to be had and people understanding that the valuation compression is happening. And I think on the public side, you're starting to get excited or at least see some opportunities, some breakouts and some follow through.
Yeah, definitely. Okay. So let's end with this.
Yep. Well, and with that, have a great week, man. Thanks for sharing. You'll put some of these ideas into the.
Yeah, I'll share them. All right. See you next week.
All right, buddy. See you.
Bye.